you have to get rid of your cash because cash is toxic. If you're holding $100 billion of cash, you're burning $10 billion of shareholder value. So every company that chooses to capitalize on treasuries, short-dated treasuries, has to go to negative working capital or neutral working capital, and they know it intuitively. We just happen to be the first public company that's a seasoned issuer that chose to flip to a different capital asset. So we're the only company thinking creatively about how to raise capital. Bitcoin yield is the increase in Bitcoin per share on a fully diluted basis. So let's just go to basic theory of business. There are three ways that an operating company can create shareholder value. Most people only think of two of them, but there are three. The first way is operating income. I can operate the business and I can capture operating income, and that goes to to shareholder earnings. The second way is investment income. I can invest $1 billion like Warren Buffett might in Apple, and it doubles, and that goes to shareholder earnings. The third way, not very well considered, is acquisition income. I can actually go and acquire another company with cash or stock or debt that is accretive to earnings per share or that creates shareholder value. Oracle did that. Oracle did more than 100 acquisitions. So if you look at companies that do acquisitions, the shareholder benefit doesn't show up in GAAP. It doesn't show up in earnings per share. It doesn't show up in investment income. So we generate most of our shareholder benefit through acquisition income. Think of it this way. I'm buying a company growing 60% a year at 1 times revenue over and over again, right? And that's what's it. And by the way, I'm buying it with borrowed money. So if you could buy a company growing 60% a year at 1 times revenue with borrowed money or cash, that would be accretive to earnings per share, but it would not show up in investment income or in operating income. It shows up in an acquisition income. So Bitcoin yield is actually a standardized way for you to figure out how accretive it was. If I were to sell if I have $150 a share in Bitcoin, if I were to sell the stock at $120 a share and buy Bitcoin, it's dilutive. I would have a negative BTC yield. If my stock's trading at 300, then it would be accretive. I'm actually capturing 50% of the spread, and I have a positive yield. So when you sell stock at a premium, you generate a positive yield. When you sell a convertible bond at a premium to the stock, you generate a double positive yield. And if you go look at Strike, Strike is basically, if I'm selling Strike at $90 a share, it's got a 1/10 a share conversion rate. That's like selling stock at $900 backed by something like $150 to $200 of Bitcoin. So it's an extremely high spread and a high yield.
I guess what I'm saying here is that this is not a traditional performance metric. You're the only one that uses this, and it's difficult for the rest of the world to understand how this compares to other traditional performance metrics.
Well, ironically, every company that ever went on an acquisition streak, what happened is the CFO comes up with a proprietary model and goes to the street and convinces the analysts and the shareholders that in 5 years this acquisition will be accretive on an EPS basis. And it's a trust me. But most acquisitions by public companies are opaque, and then the acquisition takes 3 to 5 years to play out. You could never do what we've done with an Oracle or with any roll-up or another acquisition because they've got heterogeneous credit and heterogeneous risk. What we're doing is the same acquisition 50 times in a row. And so since our common stock shareholders are focused on one metric, Bitcoin per share, right? The common stock shareholders want Bitcoin per share. We can calculate the Bitcoin per share from buying Bitcoin with a bond, Bitcoin with a preferred stock, Bitcoin with a convertible stock, or Bitcoin with equity, or Bitcoin with cash. So we will raise $1 billion, buy the Bitcoin, announce the results 3 days later. We've already generated the shareholder gain. We just go back and do it again. And so that you could only do this if you had a company capitalized on a digital commodity like Bitcoin. So you've never saw it before because in 50 years, there was never such a good acquisition target or use of proceeds as Bitcoin. We're capitalized on Bitcoin, which is 60 volatility, 60 ARR. If your ARR is higher than the cost of capital, if you're higher than 1515, like the S&P, you're positively polarized to capital. If your capital asset is less than the S&P, you're negatively polarized to capital. So we put a crypto reactor fueled by Bitcoin in the middle of the balance sheet of a public company. It's like putting a fusion reactor in a car or a plane. It completely inverts conventional financial wisdom. And so here are some stats for you, Bob. We are the most prolific issuer of convertible bonds in the market last year. We're the most prolific this year. Our convertible bonds are the most successful convertible bonds. They're the most successful bonds. Our stock doubled the performance of NVIDIA, so we have the most successful public stock. We have the most successful options market on a market cap basis. We have the most liquid stock on a market cap basis in the S&P. We're the most volatile stock in the S&P universe. And that convertible preferred we just sold, it's the most successful preferred stock in a decade, the most volatile, the most liquid, and that ATM we did last year is the biggest ATM of equity in the history of the market, the most successful, and then that preferred we just put an ATM on. That's the first time in the history of the stock market anybody ever put a shelf registration on a preferred stock. Why? All of those by the way, we also have the most successful derivatives. Look at the performance of MSTY, MSTU, MSTX. Why? Well, because we're actually putting a volatility generator, like an oscillator, that's appreciating at 4x the S&P index in the middle that's driving all of those securities. Right, so it's not an accident, it's an actual engineered design. And I guess the last point I'll make is it's not even particularly complicated engineering. The leap here is not complicated engineering. A car, a steam engine, a jet engine, a petrochemical refinery is much more complicated. You just have to make the one leap of saying, I'm going to recapitalize 100% of the company from T-bills to Bitcoin. And I don't blame everybody else for not doing it because it wasn't really possible to do before Bitcoin, and you would have been making a big leap before 2024, maybe before November 5th, as to whether or not this was going to be accepted by the establishment.
Essentially what you're doing is you're raising a lot of money, like $4 billion in low-cost debt. It's convertible notes. That's what you're doing. You're raising money, low-cost convertible notes. Is it 0% convertible notes? What's the?
Yeah, zero.
Yeah,
zero.
And you're buying Bitcoin. So raising a lot of cheap money, and you're buying Bitcoin. Then you're using any rallies in your stock to go out and issue equity and buy more Bitcoin. And essentially this is a giant feedback loop that depends on Bitcoin.
Yeah, triple feedback loop, maybe quadratic, right? Because when I sell the convertible preferred, I buy Bitcoin, which is good for Bitcoin. I put leverage into MSTR, which is good for MSTR, which is then good for the convertible bonds, which is then good for Strike. And so everything is feeding back. And if you're a hedge fund and you generate 3x the S&P index, how much capital will your limited partners give you? The answer is infinite. And if you're a hedge fund and you generate 10% less than the S&P index, how much capital will your limited partners give you? None. And so everybody, by the way, Bob, there are plenty of well-run public companies. Arguably, there are a lot of companies that are run better by more talented people, but the difference between us and them, every other well-run public company is trying to get rid of their capital as fast as possible. They're literally bragging about surrendering capital and decapitalizing the company. Apple gives it away, NVIDIA is going to return it to shareholders, Microsoft, Google, Meta. They talk about buybacks and dividends. And you have to get rid of your cash because cash is toxic. If you're holding $100 billion of cash, you're burning $10 billion of shareholder value. So every company that chooses to capitalize on treasuries, short-dated treasuries, has to go to negative working capital or neutral working capital, and they know it intuitively. We just happen to be the first public company that's a seasoned issuer that chose to flip to a different capital asset. So we're the only company thinking creatively about how to raise capital.
Talk to us a little bit about what the future is going to look like in the digital economy, ex-Bitcoin. What are we going to be able to do with this new digital technology absent Bitcoin?
The best way to think of it is 4 asset classes. Digital commodities like Bitcoin, their use cases: capital, preservation, and appreciation. Long-term digital goal. Digital currencies like stablecoin, their use case is payments. Export the dollar. You could probably sell $10 trillion of stablecoin to the rest of the world. Digital securities like tokenized stocks and bonds, their use case is capital markets, innovation, and efficiency. It's like, why can't I self-custody my Apple stock and move it to a bank in Singapore on Saturday afternoon, right? And we will export our securities to the rest of the world, right? Maybe everybody in Russia, China, Africa will be holding digital securities on their Android phone, right? And then digital tokens, their use case is capital creation. The big idea here is there's 40 million American businesses. They can't tap the capital markets. There's 400 million businesses. They want to raise money. There's only 400 companies that are seasoned issuers in the U.S. that can file a registration statement with the SEC and raise $1 billion the same day. So if you look at all the small companies, the mid-sized companies, the celebrities, the online influencers, the Joe Rogans, the bakeries, the hotels, they all want to raise capital, and in theory, they could sell a token to their customers or their fans overnight for $40 in 4 hours. But the securities law of the 20th century require that you spend $40 million on lawyers and accountants, take 4 years. So the big unlock that's going to release millions of interesting tokens, not securities, note. If they're securities, you run into a headache. But that big unlock is that digital token economy. And for that to actually, for that to take shape in a legitimate way, we actually need a digital assets framework endorsed by Washington, D.C., passed into law. There's a $100 trillion opportunity for the United States if they embrace enlightened policy with courageous leadership. I think we can export $10 trillion of our currency to the rest of the world. I think we can export 10, 20, 30 trillion of our securities to the rest of the world. I think we can export 10 trillion or more of our ideas through these tokens to the rest of the world. I think that we can export our values in the form of Bitcoin to the rest of the world. And the only place we might slightly disagree is, in my opinion, Bitcoin has won as the digital store of value because there's $1 trillion of smart money behind it, and it's 99% dominant. So, and I'm willing to put $50 billion behind that bet. You're free to bet on the other thing. Yeah.